You are definitely in for a surprise if you think the markets are very bullish right now. And today I'm going to show you some proof that when the Fed lowers interest rates, a recession almost always follows. Please don't listen to most of the noise you've been hearing lately, because what I'm about to show you is pretty much proof that can't be used against me. That the opposite is very likely to happen based on a number of historical events. In today's movie, I describe all of these events. It doesn't matter if you have Bitcoin, XRP, or Ethereum, you need to watch what I'm about to show you. Hit the like button so everyone can see this, and now let's watch the movie. First, I'd like to show you how the number of us yield curves that are inverted is moving from 92% to 67%. What a big drop before 2020 that is. But of course, there was the 2020 crash. I think a lot of you will have heard of this around the time of COVID. Our market crashed in a way that was unlike any other we had ever seen. And this happened before the financial crisis in 2007 as well. It happened before the dot-com boom as well. So far, we've seen 3 huge housing, COVID, and tech busts that all had the same yield curve. This is also what we're seeing now. I want you to look at this picture right now. On the bottom, we can see that these are the fields that are used for math. You can see the COVID slump here. This is the house bust. This is the tech bust. There are a lot of these that you will notice, like the SNL crisis, the double dip recession in the 1980s and 1979, and the economic bust in 1973, that I think most of you don't know about, but this was still a double top. Now, this does look a lot like the other one, right? This was a big high point in history that we had never really seen before. Then, of course, we just had a big rate cut, which kind of burst this bubble. And this is something we need to pay close attention to because you may remember the COVID slump. What happened then? That was totally crazy. The home bust in 2007 and 2008 was the same way. You guys will remember this if you are here at this time. As you can see, these were terrible market conditions, and what I'm showing you now makes it very likely that we'll see them again. I don't want you to fall for this kind of trick because I don't know when it will happen. But when it does, I think a lot of people will be surprised because not nearly enough people are talking about what happens during these times. If you don't know what a yield curve inversion is, read this. What I'm about to say is definitely something you should think about. First, I'd like to show you the unrealized losses that US banks had on financial securities in the second quarter of 2024. Check out this graph. This is a lot worse. It must be a lot worse than the financial house crisis of 2007 and 2008, right? This makes it look like nothing at all. We're talking about us $512.9 billion in just the second quarter of 2024. And take a look at these last few years. In other words, it's hard to believe how many losses we've seen in this time. That's why the US government has been printing a lot of money lately. As we can see, Q2 2024 was also the 11th straight quarter of unrealized losses because interest rates are still putting pressure on the economy. There are now $110.8 billion worth of held-to-maturity securities with unrealized losses owned by Bank of America, which is the second biggest bank in the US. This is 20% of the total. At the same time, the FDIC's list of troubled banks grew to 66 in the first quarter of 2024. You guys are very wrong to think that we are out of the woods. There are still a lot of losses that haven't been recognized. It's a lot more than we've ever seen in history. It's really not even close. Look at the difference, please. That terrible banking crisis from 2006 to 2008, yes, that's it. That's where we are now. You should see how big these numbers are. So much bigger than what the mind can even imagine. Many people are wondering what needs to happen to keep us from going into a slump because of all these known losses. Also, I'm going to show you something that a lot of you are probably going to be surprised by. So this is where we need to talk about a soft landing versus a recession. In the past, whenever the Fed lowered rates by more than 200 basis points in a 12-month period, which means from September of this year to September of next year, which is exactly what the Fed plans to do, there was a recession rate of over 75%. We can't not pay attention to that huge number. It's clear that there will be a big drop in prices if there is a 75% chance of a recession. And when you add up all of the previous recessions I showed you between the COVID bubble, the dot-com bubble, and the financial crisis of 2007, 2008, it looks like at the very least a strong case. That's why we need to get into it. The market now thinks there is a 50% chance that the US will go into recession in June 2025. At this point, I want to make it clear that I think we'll have the 200 basis points I talked about. In the past month, the number has more than doubled. It was only 10% in July. A couple of months ago, this was not something that people thought would happen. A 50% chance that the Fed will cut rates by at least 200 basis points over the next 8 months is also priced into the market. On the other hand, the Federal Reserve plans to cut rates by 150 basis points by the end of 2025. We don't know for sure how much the Fed will do minus 150 basis points, 200 basis points, or something else. The Federal Reserve says this is what they expect, but we've seen this happen before. There will be times when what the Federal Reserve thinks will happen does not happen. This comes after a 50 basis point drop in interest rates on Wednesday, which was the biggest surprise for the market since 2008, of course. Right now, it's clear that the market is pricing in a recession. On the bottom, there is a line that shows the chance of a recession versus the chance of a soft landing. Right now, it's exactly 50/50. But earlier in the year, there was about a 90% chance of a soft landing and a 10% to 20% chance of a recession. This is a very clear trend line going in a direction that most of us probably wouldn't want to see. However, this should actually get a lot of you guys excited because if we are going into a recession and a correction, it does present an absolutely fantastic buying opportunity before the market conditions become truly bullish. That's really exciting. For us, this means that there is a chance we can get Bitcoin for a very low price before it goes over $100,000. That's fine with me. Let me put it this way. Which would you choose when you bought it for? $20,000 Bitcoin, it goes over $100,000. When you bought it for $60,000 Bitcoin, it goes over $100,000. Really, I believe that any smart person would choose to have their money 5x'd over, say 2x dead, right? This doesn't mean I think Bitcoin will drop to $20,000 a coin. That's not likely to happen, I think. But I do think that a Bitcoin price of $35,000 to $40,000 is possible before we see this huge influx of cash into the markets. I think that would happen sometime in 2025, probably in the second or third quarter of that year, because interest rates will be much lower then than they are now. I have a lot of ideas about where the markets are going, but based on what I just showed you and the stochastic RSI, I think that there will likely be a pullback in the next few days. The daily stochastic RSI for Ethereum, Bitcoin, and XRP all show that they are overbought right now, which is usually a great sign that a pullback is about to happen. Take a look at Ethereum from the last time we got to the top of this stochastic RSI. For example, the price of an Ethereum coin was as high as 2,400 at one point, and it dropped as low as 2,237 as soon as we crossed below the zone. That would have been a pretty big bag for you guys if you did short right here. There were also many other instances of this happening just last month, in August, when it hit a high point of $2,700 and then dropped very sharply to around $2,300 right after. That's why I'm shorting Bitcoin, Ethereum, and XRP right now. You know what? I think this is going to make me a lot of money. I'm not sure, but I'm ready to wait a couple of weeks. Now, here's the deal. You can win a piece of this prize pool just for trading any cryptocurrency you want, whether you want to bet long or short on XRP or any other cryptocurrency. To get started with Margex, utilize my referral link. So if you're trading and not getting anything on your present exchange, you might want to sign up for Margex. Also, if you join my Discord, you'll be able to see all of my trades and make money along with me and my amazing traders community who are currently making some crazy amounts of money. Thanks for watching my movie. I have a question for you. Do you think the prices will go down or up right now? How useful was this knowledge for you guys as you made decisions about your own investments? I'm really interested to know. Please let me know in the comments below, and don't forget to like and follow for more videos. Use my link to join Margins. Remember, and I'll see you all soon. Goodbye.